So today I'm going to be talking about UroGen, which is a company recommended by Marco Mazza from YouTube. UroGen is a biotech company that has a patented delivery mechanism for chemotherapy drugs. The stock price is currently sat at around $12.50 and the market cap is around $500 million. The more that I've looked into UroGen, the more that I've liked it. But as with any company, there are some risks involved. So I'm going to be going through all the bull points and the bear points for this company. And then I'm going to be taking a look at the stock price to see where I think that might be heading. Also, I'm going to be taking a look at some of the upcoming catalysts, and there's one to really look out for. So these points are in order of priority, but what I'm going to start with here is the RTGel technology, because this really underpins all of the other potential within this company. So the RTGel technology is a delivery mechanism for the chemo drugs. It's in a liquid state outside of the body, but once it's put into the body, it turns into a gel, and this provides a sustained release for the chemo drugs. The great thing about this is that it can be applied for many different drugs, and they mentioned in their latest ER that they do have new applications expected. And that's on top of the applications already in the pipeline. So let's go back to the main list and look at the star of the show, and that is URN 102. So this is applying the RT gel technology to bladder cancer. And it's a specific type of bladder cancer that they're actually targeting. It's called non-muscle invasive bladder cancer. UroGen thinks there's a $5 billion market opportunity here. And on top of that, one of the bull points here is that they already have another 2 trials extending that indication in progress at the moment. So URN 102 has finished phase 3 trials and the results have been really good. So good that UroGen are now expecting a priority review. And I believe if they do get that priority review, we'll see an uptick in the stock price. I do have one major concern about this, and that is J&J do have a competitor product. Now currently this product is for another indication, but it's also a drug delivery mechanism. And not only that, the way that it delivers the drug, I actually think is more convenient than the UroGen solution. With the J&J product, you just have to insert the device, and then once the course is complete, you then remove the device. However, with UroGen, the patient keeps having to go back to the clinic 6 times over the course of the treatment. The good news though is that the J&J product is at least 12 months behind, and on top of that, they would need further trials to change the indication. So although this is my largest concern about the company, it is quite a few years away. And also, although I think it's likely that at some point they will go for this indication, it's not 100% certain by any means. They might not want to enter a competitive market. Another bear point that I want to point out for this is that they significantly overstated the potential for their other product, Gelmo. For Gelmo, they said there was a potential of around $700 million, but they're already 4 years in and they're only getting around $80 million a year for that product. Hopefully they will be able to achieve a much larger slice of the $5 million potential market for URN 102. So if we go back to the main list, the next one down is the Gelmo Potential. So the Gelmo is their already FDA approved product. As mentioned before, this has been approved for 4 years now, and unfortunately for me, I think the sales have missed the mark here. They have been talking about a $700 million opportunity, but at the moment they're only achieving $80 million. And not only that, but their sales do appear to be stalling for this. If we go to the corporate presentation, which I have linked here, we can see there's a clear flattening of that graph now. Hopefully they'll be able to pick up those sales once more. They are hoping that there's going to be a synergy between this and the URN 102. But to be honest, I'm going to wait for that shift before believing in that. However, in the meantime, getting an extra $80 million a year is nothing to be sniffed at. So going back to my main list, the last one is the significant institutional ownership. Now, normally I wouldn't point something like this out, but this is quite exceptional. They currently have over 90% institutional ownership, and this could mean that it's a bit of a hidden gem for the retail market. So that now brings us on to the bear points. And the first one on the list is the debt to asset ratio. Now, it's not too bad, it's currently about 1, but that is a $250 million debt that they have. At the moment, they're paying around $3.5 million interest per quarter, and at some point they're going to have to pay off that debt. Also, I don't like the way that the management kept on mentioning how much money they had as an accolade for them not having to do any more fundraising. When I went to the balance sheet, I wasn't expecting the debt because they just hadn't mentioned it at the same time. And I think this is normally what other companies do. And this, as well as another few things from the management, make me feel that they try to hide the negative parts of the company. And I don't think they even need to do this because it looks like the positives do outweigh the negatives for this company. So the next on the list is the significant share dilution, and this really is quite significant. In the last 2 years, it's been nearly 100% share dilution. But hopefully, as the management keeps saying, they should have enough money to get them through to profitability now. Okay, so let's take a look at the catalysts. And this is something that I really like about this company. They are actually expecting the PDUFA date announcement this week. And if that comes through with a priority review, then I'm thinking we will see an uptick in the stock price. So much so that I've bought some shares in this company. And on top of that, we have the Q3 earnings report coming up around the 5th of November. Now, these dates are estimates, and if you want to get alerts about when they're updated, just come to Ticker click here. It will ask for your email. I'm already logged in here, and then you can easily subscribe to notifications. So in the Q2 ER, they mentioned that they might have new applications for the RT gel technology. So hopefully we might hear a little bit more about that in the Q3 earnings report. So taking a look at the stock price, we can see it's had quite a volatile year. We can see a big spike here in June, and that was when they released their phase 3 results, which were really good, as mentioned before. And then straight after that, they did a public offering, and you can see the massive drop here from around $20 down to where it is now, which is around $12.50. As mentioned before, though, it doesn't look like they are going to do another public offering. They believe that they have enough money now to get them through to profitability. So I think if they can get that priority review from FDA, we could see a big move up again in the stock price. Of course, there are no guarantees, but I think with a market cap of $500 million and a potential market of around $5 billion, this company could have a lot further to go. Again, I would caveat that by saying that they have given potential markets much higher before than what they've actually been able to achieve. But even if they are only able to achieve $1 billion with URN 102, this company would already be worth in excess of $2 billion. Again, you have to remember the potential competition from J&J and other companies. But as I have said before, I do see this company going up, and so I've put some money where my mouth is. Fingers crossed for the future of this company. If you've enjoyed this video, please like and subscribe, and come and join me on Ticker.